Should we buy or sell lumber futures? So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So lumber is actually categorized as a soft in the futures commodity market. In the softs category, you have cotton, which is definitively soft, but you also have like orange juice, you have coffee, sugar. It's a strange category, but yeah. So here are the lumber futures, weekly data points, and we can go pretty far back. So the interesting thing at this point is that if we can remove some of the mess like that, you could argue that we have horizontal support way back here into the 1990s. Also some support back here as well, kind of here. So we have seen a pullback, a sizable pullback, and given the inflation in this period, one would expect a higher level to be established. Lumber, it's very erratic. It can go up big and also down big. Here, as an example, it rallied 240-ish%. It recently had an astonishing minus 68% sell-off. Very, very, very erratic. There are some time cycles of note, like around here. Not squeaky clean, but this is one of those commodities that's all about buying low and selling high. And when we zoom in a bit here, you can see that we are testing a horizontal support level. It's interesting from a bullish perspective, of course. Looking here at the dailies, I mean, there is this very clear rhythm. Let me draw it in. This is mirrored over here. This is mirrored over here. And this head here was formed like 1 and the 2 and the 3. So this is very, very interesting from a bullish perspective. Looking here at these other indicators, the RSI is emerging from one of those levels that have a tendency to form lows. MACD is like a hair away from sending a buy signal, just a bit more rally now, and we will have a buy on the MACD. On the daily data points, there's some interesting action, but not as interesting as what we saw on the weeklies. So I write horizontal support on lumber futures with a 6 for the technicals. Here we have the seasonality. To the right here, we have the average over the last 5 years in green and 7 years in blue. The seasonality from the 6th of September into the 30th or even early February. Very interesting. Very interesting seasonality indeed. Very much bullish. Looking here at the daily data points, sharp rally here into the 11th of October. To the left here, over the last 5 years, we do see that September is a weak month, but October, November, and December and January are very strong. Over the last 10 years, sharp increase in strength from September to December. Over the last 17 years, October, November, and December are the strongest months for lumber, which means that if you are short lumber, you definitively want to close out your short positions or tighten the stops on your shorts during September. You do not want to be caught short into October. Because of that, there's a very interesting dynamic in play here with the seasonality. The bulls are getting emboldened by the seasonality. They are likely to also build some positions to benefit from October, November, December, and also some January strength. This is interesting. Yeah, I think I will give the bulls a 6 on seasonality as well. This is definitively a significant opportunity for a rally. It's not something you want to see on the seasonality if you are a bear. This is so even though September is not a strong month for lumber, it's a month that is more dangerous to the bears than the bulls. When it comes to the fundamentals, due to the current level, I would give the bulls a 4 here on the fundamentals. I do think that lumber is undervalued at this price level. Here we have the statistical correlation with S&P 500 at 65%, 69% with the cut ETF, one of the wood ETFs. And then you have the pure wood ticker ETF, more global forestry and timber ETF, 75% positive correlation, and minus 36% with the dollar index. Daily data points: 62% with S&P 500, 61% with cut, 71% here with wood, and minus 83% with the dollar index. So what happens with the wood ETF? Wood is going to have the biggest impact. And this is the iShares Global Timber and Forestry ETF. So if you don't want to get into the futures market, which is very understandable when it comes to a commodity like lumber, you do have this. The red 200-week moving average, it is close by. It's kind of worked in the past, not cleanly, but not, too messy either. You see back here in July, it was buyable. We did get a rally, so if you were to buy that moving average, you would stand to gain, 14%. I mean, that's not too bad. But we are not at support yet. Looking at the daily data points, let's look at the RSI maybe. We are in a level that has a bit of a tendency to form lows, but during more aggressive sell-offs, we do see that we usually actually go below the oversold threshold. The distance here from the purple 20-day moving average is at a level that is interesting for the bulls. Going here to the weekly data points, there are some interesting signals, but a few really clean signals. Here I am comparing the lumber futures against the wood ETF. I mean, we are at a low level, interesting level in this pair. If we go here and look at the seasonality, we do see that lumber, it does actually have a tendency to outperform the ETF into the 11th of October. Here I am comparing the wood ETF against the S&P 500. We have had this downtrend for some time, but then we did form this inverse head and shoulders pattern that sort of played itself out a bit, but not in a strong manner. We went down again, but if we were to go up again, we would essentially be forming a bit of a floor here. So let's look at the seasonality like that. Over the last 10 years in red, the seasonality is more bearish, at least into early October. In blue, over the last 7 years, a bit bullish into late September, but it's not really bullish either, because we usually see a bit of a significant pullback into early October. What I find especially interesting is what we saw with the wood ETF. There is a potential support level that could help out. So overall, we end up with a 4.5 in favor of the bulls. The entry signal, stop loss, is horizontal support. Given the data at hand, we would expect horizontal support to work here. When lumber goes on a run, it can go on a very big run. The seasonality is very interesting around the corner, so definitively have this on your bull radar. So I do see that we have some time left, so let's just run through some interesting, let's call them well-known stocks. So well, how about Coca-Cola? Well, we are very close to this green 50-week moving average. It has been viable ever since early 2021 on the daily data points. The 200-day moving average, it's not been a clean signal for Coca-Cola. So maybe the green 50-week is a better signal. But it's not, Coca-Cola is not really clean when it comes to moving averages. Here is PepsiCo. Yeah, nothing like, yeah, maybe, yeah, the blue 100-day moving average, it seems to be a bit tradable. We did fall asleep at that moving average on Friday. So it's a place where maybe the bulls are going to buy a bit. Yeah, let's look at some other commodities. Here is crude oil futures on the weeklies. So the green 50-week moving average has now really functioned as a short selling level. Wrong indicator. Well, wrong tool. Short, short, and short. So the bears are making money now, going against the crude oil on the daily data points. Yeah. So if we look at some of the more recent developments, so this is more bearish, like this. Here you can see that the left low is higher than the right. But if you look at the most recent development here, this low and this low, it's not like a roaring double bottom, but it does have the potential of being a double bottom. It is distinctly unlike what we have seen since the highs here of early June. Then again, we do see this breakdown here where the 50-week is a clear resistance level. So there's that. Now let's look at natural gas. Yeah, seeing some pullback this week. Let's look at the RSI. Yeah, we're not like pulling back from an extreme RSI level. Let's look at the dailies. We were approaching, overbought territory. That's true. If we look, historically at, natural gas futures, we are very, very, very high, definitively. Talking about time cycles, we do have these very long-term time cycles. The time cycles suggest weakness into, later October. It could also be delayed into later into the year because of the ferocity of the rally. But that is just the time cycle. The thing is that this rally is all about the major war. We do know that the utility bills are becoming really, really, really high. So the social unrest that could be coming this winter might be so strong that some of the sanctions not necessarily going to be lifted, but to be modified, because it's about risk reward. Obviously, the sanctions are intended to damage Russia, but if we do see social unrest in Europe because as a side effect of the sanctions, then that will then benefit Russia in turn. So it's a very messy situation politically. And there are, of course, many ways in which Russia could antagonize and really fester some social tensions in Europe as well. So, from like a strategic standpoint here, some very tricky decisions might have to be made by European and also American officials. I certainly don't think that we will see like a removal of sanctions, but it's possible that there's going to be some modification under the theory that they don't want to give the opposing force an ability to or an open avenue to manipulate and antagonize social tensions in Europe. And there's also, of course, tensions in America. There's been, not the same, in terms of energy prices, but there's been massive inflation. And at the end of the day, the average citizen is way more concerned about their own pocketbook than geopolitical or cultural events.